Okay, thank you for coming to this webinar. I know we have people here we always have a mixed people from all around the world, and so I appreciate it. Today, because it's an educational webinar and rather very intensive legally, I have to read a few disclaimers. Okay, so I'm just gonna put them here. It's a little bit lengthy, but bear with me. So, trading futures and options involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. The risk of loss, just bear with me 1 second. Okay. Just gonna move this. Okay. The risk of loss in trading commodity interest can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition. The high degree of leverage that is obtainable in commodity interest trading can work against you as well as for you. This is a disclaimer for stop losses, which is really important. The placement of contingent orders by you or your broker or trading advisor, such as stop loss or stop limit order, will not necessarily limit your losses to the intended amount, since market conditions may make it impossible to execute such orders. The use of leverage can lead to large losses as well as gain. Optimus Futures LLC is not affiliate with, nor does it endorse any trading system, methodology, newsletter, or other similar services. We urge you to conduct your own due diligence. Okay, we had a really rough month during the beginning of January. It was a very hard month to trade. I think last year was very hard to trade as well, and I don't think that trading in general will be any easier for individual traders. So I try to do my best to bring people that are considered to have knowledge in the industry, and not just theoretical knowledge, but very practical knowledge. I've brought today Anthony Drager from MarketDelta Edge. They educate people about trading, and what I like about Anthony is approach to trading is not based on traditional technical analysis from back in the day that today most likely is invalid, unfortunately. Rather, his analysis is of real time, understands the interaction between buyers, sellers. Also, you will find, although he will tell you more about it, I find it very fascinating the fact that he is a member of the exchange still. He traded in the pits. He has a really good background understanding the market, so he understood it when he was in the pits, and then later on turned into a screen trader today. So I hope that the information that he provides you with will help you with trading, will help you make more practical decisions. I know that you guys are Anthony will show you today as far as how to look at the markets will hopefully give you some sort of a new view of analysis. Anthony, I'm going to.
All right, Matt, you're coming in and out your audio, but I'm assuming you're introducing me. Does everybody hear me okay?
I don't know what it is.
I hear you now, Matt.
Okay, I'll give it to Anthony now, okay? Thank you.
All right, Matt, thank you. Let me do a quick sound check. Does everybody hear me? Just give me a quick why if we're good to go here. Vlad, Alex, thank you guys. All right, sounds good. What Matt said to start, I got to tell you, yeah, I know it's been hard, but it's hard for people, and I'm not pointing fingers at anybody in this room because I have no idea who's in this room and your experience, your success. But these are markets we die for, volatility. We want them to move. August and September of 11 were the best months to trade. That's when the debt ceiling and the U.S. credit was downgraded. October, September of all of 08 for that matter, with the financial crisis, the best year to trade. Even though it was heartfelt, 9/11, the extraordinary volatility that came after that. But movement equals opportunity only if you know what you're doing. So I just want to add that, because from what I hear from other brokers is that there are a lot of people that take it on the chin because the price of poker goes up. But that's when things become more inefficient, and that's what we want. In order to become a good trader, you got to value price. In order to value price better, you need it to get cheap and expensive. So let's get rolling. I'm not a guy that will go on and on, long-winded. We'll keep this short and sweet. I'll give you content. I'll tell you what we've created, but not in a salesy way. You come here, you don't have to engage in that at all. But what you will see is some content for while you're here. Where are the stops and the dynamics of them? That's a picture of me in front of my workstation to give people a sense of the information I'm in front of on a daily basis. But here's what to expect over the next 25 minutes. Why do markets do what they do? What is a prop firm, and why is it important for you guys to know what it is? Not to get hired by one, but to know what it is. A baby bird story. Just lighten things up a little bit and understand how markets truly work. Then we'll talk about stops as support and resistance. And then we'll get into this MarketDelta Edge community I've created, and then Q&A. So if you ask me questions and it seems like I'm ignoring them, I'm not. I will answer them at the end, and it won't be an hour, 2-hour webinar where people fall asleep. I always start my webinars off with a picture of my brothers and my father. That's my father on the left. That's myself on the right. And he used to always tell us growing up, if you know how, you'll have a job. If you know why, you'll be the boss. And it always resonated with me, because in this business, most people just find out how and they donate. And you know who they donate to? Those who know the why. The why is absolutely essential if you're going to be consistent in this business. How did I start? A quick, non-boring bio of me. I started in the pit, the CME, all right? I quickly took some training to be a floor trader, became a member of the Chicago Board of Trade in 1999, and became a pit trader. But I stunk at it. I couldn't make money. I was in a bad pit. It wasn't very liquid. So a lot of pigeons with not a lot of breadcrumbs. But I knew guys were trading electronically. In fact, it was whispered that electronic trading and computers were going to take over this business. And I'm like, who the heck is doing this, and where are they doing it at? So I find an office. If you ask the right questions, you tend to find the right answers. I find an office in a guy who's a risk manager at what's called a proprietary firm. Now, back in 2000, I didn't know what a proprietary firm is, and I guarantee you most guys in this event don't know what it is. Some people think they know what it is, most don't. It's important you get an idea what it is, and here's why. The risk manager explains to me, he says, Anthony, we put you around guys that are doing this and give you a workstation. We work out a percentage split. If you make money, it's split. You get half for 3 years. We get half for 3 years. And I'm like, okay, that's the business. I look in the office. Around the perimeter, it's workstation, workstation, workstation with guys that are trading. Back then, it was just European futures on the Eurex exchange. Remember, this is 16 years ago, all right? That's what a prop firm is, physical office where guys are trading. So the risk manager says, I'm not the owner, so I can't hire you. Come back next week. And so I leave, and I'm thinking, do I want this job? Let's go back to my dad. I said, Dad, what if they offer me this position? He says to me, he says, well, listen, when you go back to the office, look at the cars in the parking lot. If they're nice cars, you want the job. They're making money. So simplistic, and that's exactly what happened. The cars were nice, and I go into the interview. So how did the interview go? I'm sitting there, and the owner, who was an ex-floor trader, by the way, asks me, and his very last question, he says, what the heck makes you think you're going to be able to do this? And my knee-jerk reaction is because I'm putting myself around other people, and I think that's what's going to equal my success. And he goes to me and he says, you're hired. He says, that's what I'm looking for. You're not going to do this on your own. That's why you're in 50%. You know, it says you're not going to turn the corner, and you're not going to have a light bulb moment unless you're putting yourself around two groups of people. Those who know what they're doing and those who are trying to learn and know what they're doing. Frustrated guys trying to turn the corner, but also guys doing it. Very important. Well, I did turn the corner. I started making money from the first week, April 2000. I got hired almost 16 years ago, And I went from a 25, 26-year-old kid who thought my dreams were coming to an end as a trader to a guy making more money than my dad, and I was home by 11:30 because we were trading European markets. The prop owner, right? He says two very important things he said to me that stuck with me all these years. Number one, he said being right doesn't matter. Making money does. And then the second thing, if you take nothing else from this webinar, take this. He goes, after you sell it, remember, you have to sell it after you buy it. And I'm like, what does that mean at first? And that's where I came up with the phrase, after you buy it, you're a seller. We're going to talk about what that means, and it's really important to paint a picture. So I'm a storyteller. I'm an analogy guy. So I'm going to tell you something that's a little, put the kids away. They don't want to hear this. We're not going to use bad language. I don't do that, but it's a little risque of a story. This is how markets move. This is cutthroat. There's baby birds in this world. What are baby birds? They're very helpless creatures. Well, they're not professionals. You talked about, Matt, people are having a tough time in this month. If you're having a tough time in this month, it's because you're pretty helpless as things are moving. So baby birds are helpless. They wait for mommy bird to come down with food, with the worm. Mommy bird's really close to giving these baby birds what they want. She represents the market price. Just when she's about to feed them, the hawk comes in, rips her head off, takes the worm, mommy bird away, and the baby birds fall out of the tree and a truck runs over them. The hawk represents professionals that steal price away from when guys are just about to get out of a losing position. Let me put this in more trading terms. Let's say on the screen, I don't care what the market is. After you buy it, you're a seller. Let's say it's the E-minis that you guys trade. And let's say there's a line in the sand that everybody, not everybody, but you, unbeknownst to you, you buy it, but so do a lot of other people. And so there's a lot of longs from this area, this black line, right? And all the market does, guys, is go down, right against you. All you faced is heat. And all you're taking is heat, a lot of pain. So what happens when that market starts to come back to where you got in and started that pain? You have the inclination to do what? Sell it, right? To cover it for a break even. You lost a lot, you were down a lot of money, you have your first chance to get out and you're selling, but unbeknownst to you, guess what? The sellers are stacked because there were a lot of longs opened up at that black line. There's a lot of longs that took nothing but pain. If the market comes back up to the scene of the crime, there's going to be a lot of sellers trying to cover that position, and that's going to create resistance. And the market's going to get close to some of that selling and roll right back down. And there's going to be the emotion of these sellers just saying, the heck with it, I'm out, I'm out, I'm out, I'm out, and they hit the price lower. That's why and how markets move. Profits come from other traders' losses. You have to have the ability to read a market by assessing where others are going to puke, and that's a slang for exiting a trade from the floor. I puked these at 15. I got out at 55. I had to puke them. I bought 60s. I puked them at 50, and that was exiting a position, and usually for a loser. So how are stops used for those that might not know? First of all, most of them are used to exit a position. I know you can use stops to enter it, but most of them are used to exit. All right? The majority are definitely used to exit positions. Secondly, they're usually a losing position. I know there's trailing stops to get out of a winner, but most of them are to lose, and most of them are to exit that losing position. And how do you feel when you exit a losing position? Pretty emotional, right? I know I do. I know I have. Everybody does. So you got to keep focus on what the emotion is when people have to puke or get out of losing trades. And that's how stop orders are mostly used. Now, in other words, this is about where you're wrong. I don't care if you invest in some of the stuff we put together or not. But I'm going to tell you this, and I've heard this from everybody that has joined our community, almost everybody that I've asked. The thing that they liked about us and about this is that we're not afraid to talk about losing trades and our losers. The marketers out there want us tell you a compelling story about big winners. That's great. If you want grapefruit eyes and you want to be compelled to wait in line for the iPhone around the building and be a retail customer, follow that. If you want to know the professional way to learn to trade, it's about knowing your exits before your entries and managing your risk and being okay with being wrong. You actually make money and be wrong and lose money and be right. So again, there's a difference between those who just want to boast about their winners and those who, I don't want to talk about my winners. I'll tell you about my losers and why some of my best trades are losers, because I keep them small. So let's get into an actual chart. This is just a simple candlestick chart, right? And let's just create simplicity around what we're talking. I don't care how simple something sounds when you know what is hitting the fan and you're emotional, like a lot of people are when they have open positions. Throw objectivity and simple out the window. The key to this business is to be objective in a subjective emotional environment. That's the key, to be objective in an emotional environment. It's not hard how to be a good Texas Hold'em poker player. What's hard is to execute when the chips are on the table and the emotion's driving. You'll do things you never thought you could do. So you got to get that in check. So let's look at the simplicity of this. Just look at this rectangle or box I put around that congestion. See, there's a little hole in the box and the market slides right through it. Then we'll put another fight or congestion. Stops came out because everybody long in that congestion has to puke, and they puke through the bottom of that line right there. And the hole in the box sends them south. You could draw a box around here. The shorts puke in that big, tall green bar. Another one shoots lower. So, point is, you have to visualize where the fight is and where the guys who are long are wrong and where the guys who are short are wrong. There's always open positions at every single moment in this business, in any product, in any instrument, at any time. There's always people who are long, want it to go up, and short want it to go down. Don't always try to worry about how you feel when you're in a trade. Worry about how others are getting collected too long or too short. Now the baby birds, how do they fit into this? The baby birds, let's say for instance, are all short, right in there. They're all short. And the market goes right against them, straight up. Then the market comes back down, and what do you think these guys are doing when it comes back down to where they got stuck? They're trying to buy it. And all of a sudden they chase it up, just like that. And that's what creates support in this case. I can't draw with a pen, or I'd make it a little bit better from an illustration standpoint. I don't think you guys could see my cursor. But these first set of birds are stuck shorts. They're now buyers. Then they try to buy it when it gets back to where the pain started. They can't get filled, and they chase it up. That's the dynamic that you have to understand. If you could see the cursor, great. So look where these birds got stuck short. You might think it's a joke, but it's not. People get stuck all the time. And if you're not good at seeing where there's clusters of stuck positions, you're not going to get good at support resistance. If I draw this cursor, but if I take this cursor straight across, that's why this market stopped there, did a little teacup, and rallied. These birds, short, trying to cover it. When you get people that try to cover losing positions, and if that position's short, that's where your buying comes from. That's going to send you up. That's where the emotion is. Let's talk about this step by step, and then I'll show you something on a chart from today's session. How many guys in here, guys or girls, trade? What markets do you guys trade? ES, NASDAQ, Dow, currencies, whatever. Type in there. So we got a Russell trader, S&P, and oil. Some more oil traders. Great market, the crude oil. Some more ES. Bonds, stocks, E-minis, Russell, good. Euro and the Swiss franc, DAX, S&P. The Euro stocks, Martin, and the DAX from the two very first markets I traded as an electronic trader back in April of 2000. The Boone, great market. That was what most of our shop traded, the Boone. It was the most popular market in our shop. When I was hired, I was trading equities, and the treasury guys, Boone and Bobbles, were the Boone Bobble were the two more popular products on the fixed income side. But the Boone, very good, thick market, but moves, and it really pioneered electronic trading because it was a liquid market that was very tradable, and it moved, and it made the Eurex exchange very popular very fast. All right, so step by step. Number one, you have to visualize or draw boxes around the fight. All right, number two, you have to put yourself in the shoes of other people who are long or short. Third, you have to say, where would they be nervous? If you were long or you were short, where would you get out? And if it's an obvious place where you would get out, then it's obvious for all the retail traders. That's how you understand where stops are. That's how you polish your predictive skills of being able to assign where they're at. And then you mark where stops come out for future support resistance, and I'll show you this on a chart from today. Not just an image, but from a live chart from today's E-mini session. So it's not only important to predict where the stops might come out, but it's important to predict, or not predict, but know where they came out for near-term future reference. There's one thing nobody could debate, that this market, there's one thing nobody could debate in this business, that number one, markets move based on emotion. They get cheap because too many people are short. They get expensive because too many people are long. Okay, it's something nobody would debate. The other thing that they don't know about, but if they did, nobody would debate it, is the biggest weakness of every trader is qualifying their levels, their opinions. They have the right opinion, but they can't trade it well, so they lose money. That stinks. And that's about reading the real time. I've got 4 kids, 11-year-old son. I can have him explain what happened today step by step. But he's not going to be good yet in understanding what's going to happen next. His name is Anthony also. Anthony, what's going to happen next? Well, I'm going to buy it here. All right, then what? Well, it's going to go up then. Okay, what if it doesn't? Well, yeah, well, nothing. You don't have an answer because you're in 6th grade and you don't think about that. All you think about is being right. So real-time analysis is where your skill is. Now let's go to a chart. This is 2 charts I use. I won't talk about this one right away or right now. Let's just talk about this one. This is called a footprint. And if you know MarketDelta, you know what the footprint is all about. The footprint takes candlesticks, and when I take the wheel and spin it, it turns them into numbers, or the footprint of where the market laid out buyers and sellers. Just trust me on this one. If you look at the X, on the right side of the X are aggressive buyers. On the left side are aggressive sellers. Forget about all the reds and the greens for now. All right? I'm going to show you where stops came out and how it works as subsequent support and how you see that without having to spend minutes trying to find a perfect example, because it happens time and time and time again. I don't have a pen, so it might be harder to see this. Do you see this thin spot? It gets all green in here. This is an up bar. If you see my cursor, this will help. This is an up bar. It gets fast right where my cursor is, which means what? A lot of quick buying came in. Do you see how, if I go across with my cursor, how it held the bottom rotations every time it tried to come back to where the stops started? That's what I call it, where the stops started. Forget about these hollow boxes. But point is that straight across from this thin spot, I call them, is where the stops came out. It's no coincidence that the market held that as the bottom of consolidation for a long time and rallied up. Take a look at down here. You see these green stacked buyer, buyer, buyer? The market went up past fast in here. It rotated back down once, back down twice, and then ran. Look at these reds, sell stops. Came out quick. It's thin, right? The volume is thin, which is indicative of the market moving fast through there. That's why it's thin, because not a lot of volume has a chance to trade. If I don't have a drawing tool, but if I take my cursor straight across, it's the top of congestion for 1, 2, 3 rotations until finally the shorts in this consolidation said uncle and bought it north. Your bias better have changed. Reading markets real time. Here's another one. See these sellers come in, bam, goes down quick, thin spot, rally, sells off down to here. 0.4 comes right back to where the stops started, and then rotates sideways to lower. Look at this one. Sell stops come in right here. Market shoots lower, fast, thin spot. Follow my cursor across. Why does it stop there and go down? Baby birds. Thin spot. Down, comes back, rotates, goes south again. Look at this one over here. Buy stops come out. Green, green, green. Shoots up to 0.5 even. Rotates right back down to where the stops started. Continues to stay sideways to higher for a while. This works every time. No, I'm just joking. Nothing works every time. Matt probably had a heart attack. Nothing works every time. It's not supposed to. But that's where you got to get good. You know, like a baseball player, know where you're going with it before the balls hit to you. That's, you know, one of the first resonating phrases I heard was know where you're getting out before you get in. Guy who trained me how to be a pit trader said that back in 1998. So the stop started. Now here's another thing that I try to help people practice. It's harder for me to show this without a pen, but let's just take this for example. If I'm looking at, you guys can see my cursor, right? My arrow. All right, no. Someone said no. Damn, I thought someone said yes earlier. All right. And that stinks. All right, wait, hold on. Let me see if I could use it from here. Windows composition required. Oh, that's no good. How about this one? Nope. All right. Well, let's just make do at it. You see where my gray, you could see, I know you could see the gray vertical line. Do you see the top of the bar that this gray vertical line is at? You see it? And now you see this one. Oh, cursor's back. All right, good. Thanks, Paul. So here, this is a rotation right there, top of a rotation, down. Top of a rotation right there. Top of a rotation right there. You have to assume that above those 3 rotations, shorts are probably going to say uncle and get really nervous. Especially the ones that are short down here. The ones that are short up here might want to take profit, but the ones that are short here are going to say uncle above the top of consolidation. So you see consolidation all the time in ranges, but you got to get good at stripping out the randomness of it. Most people will think, and I don't mean anybody in this room, but most people will think that the more a resistance level works, the more it's going to work, and that's absolutely wrong. The more it works, the less it's going to work, and the better you can at predicting that the top is going to fly off. Watch this thing, buy stops galore come out right there. And you could see them right there, and you could see them with all the green that comes out. Now, I knew that happened. That's why I showed you the example. But we predict and see these things as traders all day long in real time. I know that if I'm short, I'm going to get stung if this thing creeps above even, because there's a lot of other shorts that are going to try to put buy stops there, shoot it up. No coincidence that all the green and all the stops came out right there, right above these tops. Then where's the market come? Right down, rotates right down where stop started, heads back north. Comes down, stops again, heads back north. These are not coincident patterns. They're not about pennants and double tops and double bottoms. That's all crap. That's all stuff that you recognize well after it happened. This is real-time predictability with a skill to analyze where others are going to get out and be able to make better trading decisions. And everybody in this webinar today, I don't care how much money you made this year or last year, number one, never stops learning, and number two, goes into trading ruts. I do. And it's when I'm not picking good locations. When I'm qualifying poor, I'm trading poor. Everybody, when they trade poorly, it's because they're executing and qualifying poorly. Most guys in this business never learn to qualify. That's the problem. All right, let's go back to the slides. How many people, by the way, have heard me somewhere else? Well, just a couple. Here's the fifth step on here. Talk it through with other like-minded traders. That segues into what we've created. It's not the content that's your edge. It's community. I made money because I was around guys doing it. I was in the pit, afraid to raise my arm, because I had no idea where the market was going. I was so risk averse, I was paralyzed. And I would read books about, what the heck was that book called? Face the fear and do it anyways. It was all this stuff I'm reading, and it came down to I wasn't around while you're around other people in the trading floor. They're not a community. They're all against you. And it was when you get around like-minded people is your really best chance to succeed. It's a very lonely business. Something's got to be compelling. So we put together this program. It's not a course necessarily. It's a program because it never lets go. It never says, here you go, goodbye, good luck. If you don't know anything about trading, there's an easy track for you. If you know a little bit but not much, track 2 takes care of you. Most of you guys probably could skip through the first 2 tracks, and the meat, the nuts and bolts are in track 3. But they're not super long videos. Track 3, ebook, and at the end of each lesson there's a 10-minute video, because that's the average attention span. Then we have this track 4. This is where community starts. What do I mean by that? Every Tuesday we meet, just like we did in a prop firm. If you guys worked at a prop firm, don't you think you would meet once or twice a week to discuss the markets? Of course you would. Where do most people go today? Trading rooms and forums, things where they're really not communicating. And they're not talking to professionals. They're talking to retail people. They have no idea these dynamics. Track 5. It's this portal that has 2-minute clips of live setups and what it looks like to read order flow on a dome and in that footprint with a voiceover. So I could spend months trying to tell you how to trade, or I could just show it to you in dozens of these clips. And then finally, track 6 is what we added, and it's called a team room. And this completed my vision of bringing a prop firm and making it virtual. The team room isn't about typing. You talk and listen to people. And guys aren't talking over each other because we've got other rooms. We only let so many people in, and then you'll go into another room, just like an office, right? You expand. That's what we did. So the banter is where I did most of my learning. I'm sitting at a desk, okay? And a guy next to me and behind me And the other side would say, hey, look at the Euro stocks, or watch out for the bonds. The Boone's caught a bid. Don't you think that's helpful to have more eyes and ears on what matters? They're not calling trades out. That's what happens in a prop firm. People don't tell you their trades. They keep you aware of ancillary markets. So we created that with a virtual team room. It's not a trading room. It's a virtual office. And that's a bonus because it wasn't around when we rolled this out. So I urge people to start like we did in Chicago prop firms. And by the way, these proprietary firms, they're mostly in London, Chicago, New York, the bigger financial cities. You're not going to find them in the middle of Texas or Tennessee. You might find some in Miami, LA, but true prop firms are mostly in Chicago because of the futures exchanges, Board of Trade, and Merck being here. Take what you know. What we do is, the content's not the edge, guys. I didn't invent order flow and market relationships. All we did is reapply it to trading. I don't have a secret sauce. Be honest with you. If I had a system, you might be compelled if it worked 95%, you buy it, and then you wouldn't like me. I don't have a system that works 90%. If I did, I wouldn't sell it to my mom. She might be mad, but I wouldn't sell it to her. We take your skills that you have, but give you the structure and the knowledge to execute, to actually execute, and that overlap is where your success lies. Taking what you know as a consumer to analyze and value price and turning it into your ability to analyze and value price as a trader. How is it delivered? Well, like I said, there's ebooks, there's videos, and exercises. I actually did a pilot program and interviewed guys who went through this, and we created exercises and drills. How many people in here in the past have traded on sim? Most of you, right? And there's nothing wrong with it. So how many people have traded on sim in the past? Nobody? All right, there's some guys. Most people, right? Most people will trade on sim in order to test the strategy. And then what happens? You start making money paper trading, and you can't, and once you go real, you lose it. And you're like, what changed? And I'm not here to tell you what changed. I'm here to tell you is, don't trade on sim to make money. Trade on sim to lose money. Trade on sim to practice. You ever go to a practice of a NFL football practice? They're not playing a game. They're broken up and doing drills. Not playing a complete game. They're going over and over something. There isn't drills and exercises in this business. And that's why so many people struggle. Here's the videos we talk about. This last video you just see on the right. When you play it, it shows you on a dome and on charts what to look for when big buyers come in, big sellers come in, and how to use that to your advantage to execute, to give you confidence, to give you an idea. I wrote something down yesterday and I shared with the community. The most important information we look for, we don't have yet in this business. I'll say it again. The most important information we look for, we don't have yet. And so many people try to dig around for it and homework, and prepare, create an opinion. You don't have what's most important. That happens in the real time. So community of these weekly sessions, every Tuesday you come in, it's recorded. If you can't make it, you'll see it on a recorded portal, private portal. And then the team room is every day. Every day you come in, we got guys that start in the European session, and then it gets a little busier when the U.S. opens, and then it's pretty empty after about 3:30 Central Time when the markets are pretty much closed. What does it cost? How many people in here have invested in education? I hear this all the time, and I agree 100% with people. 100% with guys that have invested in education and are skeptical. And I tell them, I would be too. I'm not smarter than you guys. I just geographically grew up in a city that I started on the floor where guys who were making money were there. And then I got hired at a prop firm. So I started and I was at venues that were professional traders traded from. I didn't have to do an online search and be told this or told that. What this isn't a system. It's not a indicator, okay? It's a program that allows you to hone in on what's important, but then be around guys who are like-minded and are doing it. A virtual office. And it's not upsell city. A lot of people get something and they, oh, well, that doesn't work. You got to buy this, another 2,000, another 2,000. A lot of those courses end up costing you 10 or 20,000. You don't learn a thing. We have guys in here that, well, here, there's 3 tracks we started with, okay? And the cost of those first 3 tracks and track 4, which is the ongoing live sessions, is $5,000. And people have paid $5,000 for it. There are people in there that paid $5,000. So, the end of the week, we roll this out, but it's always time sensitive. We don't always roll it out, but when we do, it's always time sensitive. And Matt asked me if I could push it till next Tuesday. So, it's not the end of the week. It's going to be till Tuesday, the close of the market for Matt. Instead of $5,000, you could make 3 payments of $795. So you save more than you spend. If you want till Tuesday to pay it one time, it's $19.50, and it's one time. Also, you'll get unlimited access to all the coaching classes we did all of last year. There's like 50 one-hour sessions, and then we add each one every Tuesday. Some of them are interviews with other prop traders, but maybe a few of them. The other ones are topics about what's happening, what's going on, how to reinforce it. Here's a drill. Do this exercise. Let's talk to someone else in the membership. How are you doing? How did you turn the corner? That's powerful stuff. So this limited time offer will include a link that I'm going to add in here when I start the Q&A session to go to the website, check it out. And you have till Tuesday, February 9th, the market close. And then we'll do track 6, which is the virtual office. People ask me, well, do I have to pay every 6 months or year? No. It's indefinite? Yeah. Last year at this time, we didn't have the coaching sessions. We just told people we're doing a session every week. Lo and behold, we got 50 sessions. And we're doing one every week, starting this year, obviously. So you don't have to invest in this, but you got to invest in something. I don't even care if you're making money and consistent. Because everybody goes into a rut and things change. Styles change. You got to stay on it. You got to get through the waves. So let me put in that link. Guys, pop in your questions as I do this. I'll send in a couple links because I know in the email blast that Matt sent out, we promised you a bonus video from one of these tracks, and I'm going to send it to you in a link. First things first, though. Pop your questions in as I do this. Oh, that's why it's up here. Okay. This is a long link. Click it, it takes you to the website. $60 and counting, Alex. So the question is, how many hours of lessons total? 60 and one more each day. This is a good question. No, all styles of trading. I got women in there and guys in there that are investors. And because I tell people, no matter what your time frame, you got to get in and out real time, don't you? So finding good locations is important, whether you trade for 5 seconds, 5 minutes, 5 hours, or 5 years. Entries and exits. It's a good question, Alex. Let me bring this down here and show you guys something. Here's the website. Click the link. It'll take you to this website. Here's track 4, for instance. Here's all the videos and the titles of them and the dates we did them. They're at least an hour each. Then go to track 3. This is a cool track because there's an ebook and then videos, 1 through 11. If you try to click on one of them, it's going to have you pay the $5,000 price to get access. I'm going to give you this one for free. I think this one right here. I forget which one. Oh, here's what I'm going to do. I was only going to give you a short one. I'm going to give you a whole hour coaching session that we did from January 19th of this year. All right? This is what it's going to look like. And this is what we do weekly. I'm going to give you a whole hour of that. Watch it. Then I'm also going to give you a video from what track 5 looks like. Short clip. It's only 2 minutes long. Watch it. And these will be available for about a week. Then I'll put them back private. So this one, January 19th, guys, is, oops. If I go to track 4, January 19th, if I try to click it, that's obviously a paid video and content. As you see, I'm going to give you that one, station to station, it's called, in your chat box. Any other questions? It's time. The offer's time sensitive. $19.50 one time, $7.95 a month for 3 months. Usually when I do these, it's to the end of a week. With Matt and Optimus, we'll do it till Tuesday at the market close. But I got to tell you guys something about brokers. I don't like brokers. I started in a prop firm. We didn't have to deal with brokers. When I left, because I wanted to make a dollar, keep a dollar, the first broker that handled my account, he didn't know a trading account from a pair of shoes. He might as well be an insurance salesman or shoe salesman. But that's fine. Maybe that's who I got. Didn't really matter. So then he leaves, and I get another guy who's handling my account, and he's worse. I have no idea what traders go through. And then I meet Matt a few years ago, and that's what's unique. Most of these brokers don't know what traders go through. They don't know the industry. He shoots straight. And that's what I like about them. But I'll be honest with you. Brokers, most of them, they just want to sell a trading account. And they don't know what we go through. They don't know what we go through. John, what do you mean, how is this SPY calculated? Nina, no, it's not. So here's a question. So the buyers and sellers, per my chart, it's not a proprietary indicator. It comes with the software. It doesn't come with the Edge course. The software is a monthly small subscription price for our charting software. But you don't necessarily need it. Some have it, some don't, that are members of this course, Nina. But it's called The Footprint by MarketDelta, if you want to look for YouTube videos about it. The Footprint, it's not a proprietary indicator. It's a way to look at, it's a way to chart time and sales, if that makes sense. Well, here, the S&P index is not divided equally by 500. They weighted on market capitalization, John. So when they're coming up with an index, whether it's the Dow and there's 30 stocks, the NASDAQ and there's 100, they weight it by market cap, maybe other factors. I'm not a financial advisor, and these are things that aren't that important to understand exactly as a trader, but you do want to understand some stocks mean more to the index than others. You do want to understand that, yeah, that weight makes a difference. So, for instance, Apple, if it has a big move, you could be damn certain the NASDAQ's going to get yanked around by it. So if you're a NASDAQ trader or even an S&P trader and Apple's taking a beating, you're not going to be caught as much off guard. That's part of this community and knowing how to trade correlation. And the SPY is an ETF, and it tracks the index. Another good index ETF is the XLE. It measures the energy sector. So when oil's moving around, energy sector's influence, which is why oil has been very important to know what it's doing if you're an ES trader and vice versa. That answer your question, John? Anybody else? Let me do that. As you guys are doing that, I'll give you the there's the free coaching session, and here's the free track 5 tutorial. Watch the coaching session first, though. Okay? Watch the one. It's only an hour. Watch it. You'll like it. We didn't put this program together over the weekend in our garage. We actually, knowing the background of professional trading and how so many guys have made a living out of this, doing it the way we've done it, we had a seminar and put together a book. And the people left the seminar and loved the book that I put together. So we met like twice a month with these people and asked them questions, interviewed them in front of others. And then we started to create the website that you guys see right here. And we realized that, number one, there has to be a beginner stage for some people. And then there has to be setups and ideas of why the market does what it does, but not a system. There has to be coaching sessions to keep people from floating away. There has to be clips to show people what I'm talking about instead of just talking about it. And then there has to be a virtual office, which has always been my vision. How do you recreate prop firm banter? Because I'll tell you something. The prop firm banter isn't what you see on forums. We're not saying, well, anything you read on a forum, strip about 98% of it out, 99, all of it out. Maybe a couple things make sense, but it's not the banter of a professional trader. You guys want to be a baseball player, you don't know who the New York Yankees are. That's what retail traders, not you guys specifically. That's the world of retail, not professional traders. They want to play baseball. They don't know the Yankees exist. Most people want to trade, value, execute, and they don't know the inside of a prop firm. Absolutely. So you get access after a week, Lucas, whether you want to go in or not. So you're all in. Once you invest in this program, you have access to everything. I give people about a week to absorb some of the stuff. You won't be maybe through it in a week, Lucas, but track 6, get in about a week later. But you don't have to be tested or anything to get into 6. You do want to have a little bit of time to get some of this stuff under your belt. But as far as how long it's going to take you, it's that's what's nice about it. Everybody's going to learn and go through stuff at their own pace. So you take your time. So that's how I do it with people. I tell them after a week, it says it in an email. We make it real easy after you do this. We send you an email, step by step, how to go through this course and what to do. all the links, username, password. Once you get into this course, you have a username and password that you fill in right here, and it brings you in, and now it opens up everything. Let me show you something else. Let me see if over here I'm logged in. Hold on a second. No, I'm not. Hold on. Let's see over here. Hang tight. Anybody else got questions? All right, here's where I'm logged in. Hold on a second. Here's what's cool. So I'm logged in, and it says here you're on the edge of success, so you can see you're in a different screen. Now you go to track 4. You open up a video. You register to our group coaching session once. You're always invited. You click this, opens it up, press play. You're ready to go. Then, in the first 3 tracks, what's cool, let's go to track 3. I'm going to show you this. You click the first video, and it brings you to ebooks. This is the ebook, and it's put together professionally with, well, it's just not all written as you might expect. Then what's cool is you read this, and then you press this, and it takes you to the appropriate lesson, and that's how you go through the course. So, again, this is done in an email. Step-by-step instructions after you decide to do it. Tony's asking money back guarantee. I would if I could get the information back out of your head. Guys who do that, and I don't blame you for asking, guys who ask to do money back guarantee is because they know they'll make more sales, and people, even that don't like it, won't end up asking for their money back, and they play it that way. I don't give guys every duck in a row to make a decision, because that's not what trades are. So I can appreciate you asking, but it's not like I'm selling you a yoga mat. Send me the yoga mat back, and I'll give you your money back. I can't get the information back out of your head. Lucas, can you walk through at your own speed? Oh no, that's John asked. The big firms play these games with each other on a bigger scale, the way you are explaining day trading. Well, here's the thing: is the big firms, prop firms are different than institutions. Prop firms, we're professional traders that are, if you think of like a room, and we got brooms and we're sweeping up in the corner of the room. You know what I mean? The inefficiencies. We're sharks that go after a lot of retail money that have no idea what they're doing, leave bids and offers all over the book. Institutions sometimes will give up a few ticks here and there because they're playing longer term. Are there games played? Yeah. It's good to recognize them so you don't become a victim of the game. But in the end, it's about knowing that the market always goes to big orders, and the market always, it's its job to clear the stops when there's enough, when there's a lot of them. Not your stop, but if you got a stop order with a lot of stop orders, the market's going to go take them out. So Eric asks, have I ever checked the accuracy of the volume profile reading? It's not straight profile reading, but it's being able to track the, there's some subjectivity to it. So no, not accurately, but the careers that we made trading would, because that's how we all traded. We didn't have access to the footprint, but we were all looking for when the market was going to sweep. And a sweep was always indicative of, if it was a sweep up, people were covering shorts, a sweep down, people were covering longs. But, volume profilers, Eric, they have like 80% when this happens, this happens. The problem with straight profile trading and analysis is profile gives you a great opinion, but a bad way to execute that opinion. And you got to take too much heat sometimes when you're right. And that's not trading. All right, guys, I think you got all the information you need. I'll give you one more time the well, I think you have it. I don't think I got it anymore. Well, here it is. Here's the link one more time to go to the website and come in. You could sign up for free for another webcast that I did, a couple more bonus videos. If you got more questions, our email address, edge@marketdelta.com. One unique thing about Trevor and I is we're reachable. Most guys that, hold on a second. Most guys that have heard me do webinars and YouTube videos, and they'll say, wow, Anthony, I didn't think I can get you on the phone. I said, I want to be important to people. And if you want to be important to people, you got to be available. So we're available to give people, if they got questions, time for answers. So take advantage of that. Take advantage of thinking about this limited time offer. I'm going to kick it back to Matt, I think, to wrap things up. But I appreciate you guys coming. Watch the free videos we gave you in 1 week. They'll be private again. And then you'll find the payment button when you click for the free webcast and bonus videos. I'll bring that down and show you that. The 1950 bonus videos, or 1950 for the course and all the access, will be available. You fill out this form on the website. If you think of a question after this event, again, feel free to email or call us. We'll take care of you. Matt, are you there? My pleasure, Eric.
Yeah, I'm here, buddy. Thank you for the presentation. I really appreciate it. I'm gonna stay at work, guys. If you need to call me, if you need to ask anything about Anthony or their program or their platforms or anything like that, of course you can contact Anthony first. This is my number here. Let me try and do that. Okay. There we go. You're welcome, guys. You're welcome, Patrick. This is the toll-free number. If you're out overseas, this is the number. So, and you can find us on the chat on our website on optimusfutures.com. Let me see here. This is our website. Okay, and just so you know, one thing I wanted to mention, and besides Delta being an educational company, also offers really good platforms that go along with their education. MarketDelta Chart Trader, really good platform. What Anthony is teaching. In any case, I really wanted to thank you, Anthony. I wanted to thank you very, very much. I assumed you covered all the questions that people had, and they will send you an email. And I'll just end the room on this note and thank everyone. Okay, so thank you again, guys, for coming.
Yes.